All right, welcome back for another episode of Carnivore Trades. Today is Thursday, February 1st, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here today staging a pretty good recovery. So we gapped up this morning, had a little rollover, didn't quite get down to, I was looking for 48.50. And maybe 48.45. We didn't quite get there, obviously, and then we kind of put in this little pivot, rallied up, and then we started to pull back. I talked about 48.80 being a level of interest, and we kind of pulled back off of that area. And then we got news that there was a ceasefire in Israel. It turned out to be, from what I can see, I've been trying to keep up with it. I did have some appointment earlier today, so I'm a little out of the loop, but it does look like they denied it. But we got a pop on that, then a pullback, and now we're rallying up. This is a major level here, 49.05, 49.06, right there, those pivot highs. So it's a pretty important psychological level because that was yesterday's high. It's also essentially the pivot high from the FOMC reaction. So that's going to be an important level. I don't know if they could juice this up. I'm doing this video a little early because we're going to be covering earnings after the bell with the live stream with members. But this is an important level here. We'll see if they juice it up here in the next 30 minutes. It's not that far away, or if they just hold it off to keep everybody guessing. But either way, we have earnings coming out after the bell, so this could all get negated here. Who knows? Maybe they all miss and we go lower. Maybe they blow out and we push up to gap fill. So we'll see how that plays out here tomorrow, or I should say, tomorrow morning. We also have NFP, so that's the last kicker. That'll be at 8:30. So that's kind of the last of the big data that we have to get through here. It's been a wild week, obviously. We had some volatility. But right now, based on yesterday's action, because I know we've had a nice recovery here, but based on the action and the volume, I'm going to give the bears the bias here until we take this out. You take this out on a close, then you can say this top is negated, and then we can go higher. But until then, we have a high volume reversal. That's a sell signal, and I'm going to go with that until proven otherwise. Another good example here is if we go back to July, we had this big engulfing, and then the next day we were right back up. The day after that, we were up again. A little inside day the next day, and then we started to push down. So don't think just because we've bounced here, that means it's all over. Yes, the trend is still up, but we still have to close above that pivot to negate or fully negate the sell-off. Triple Qs here, up 1.1%. Again, just like the spiders. About the same exactly. Pattern-wise, a little bit softer, though, intraday. So the Qs gapped up more than the spiders did, but kind of rolled over and more of kind of like a flat kind of floating pattern, whereas the spiders had a good thrust and now kind of a secondary thrust, or the Qs are just kind of floating higher, not really having that robust move. But either way, again, same thing applies here. High, you can make a case for a lower high there, and then if we get another lower high and take this pivot out, that's a daily lower highs and lower lows confirmed. But right now, getting a bounce here, and again, we got to get above 429.85 on a close to negate that for the Qs. So very simple there. If we do start to head down for whatever reason, we get puked out in the after hours. Again, there's going to be a lot of support here, and the big level I'm watching is on the SPX. It's 47.90. So you get to that area, they will buy that dip. So just to be aware, does that last for a few minutes? Does it last for a few hours? Does it last for a day? I don't know, but we'll have to see how that, if and when it gets there. But that will be a big level. So anyways, Russell 2000 here, definitely on the softer side. And this is just amazing stuff here today. So IWM down, or she was down a little bit earlier, but still up 1.25. Why? Because KRE. So more problems in regional banks. That was really a big focus today. KRE was down about 6, I think it was a little over 6% at one point. It's still down 2.7, but came way off the lows. And this market, it didn't even go red once. Look at NVIDIA here. Look at stocks like SMCI. Obviously, this is really bullish for chips. Banking crisis. This should go to 600 at this point. But in any case, it's just amazing how nothing can take this market down right now, or at least not for long. But again, we'll see what we get. We got to get above that pivot there at 491 and change, whatever it's at. But anyways, Russell 2000, it was down mostly due to those Large concentration in regional banks. We hit the 50 MA. We got to bounce above that. So Russell trying to hang in there, but you do have lower highs on the daily. If we take out this pivot, we're going down to 179, 180. The Dow here, right back up again. Pretty good engulfing candle yesterday with an uptick in volume, but right back up. That can negate that high with close above 385.82. Again, the Dow, I'm a little less, I care a little less about because it's price cap weighted and it's only 30 stocks. But there you have it. Those are the levels there for the diamond. SMH here recovering a little bit, so up 1% today. We talked about Nvidia a minute ago. Not a ridiculous move. Nvidia is really kind of the only semi that's really pushing outside of SMCI, but SMCI is still a pretty small company relatively. You see the semis there getting a bid via the SMH. But again, we put in a high a week or so ago. Pretty good tail candle with volume. So it's got a little bit of work to do to take that high out, but you still have, you're still in an uptrend here, and we're getting a bounce. We'll leave it at that for now. IGV, same thing, up 1.5. If this consolidates here, this can still go higher. So 430 is still resistance until proven otherwise. They did save that window. Obviously, everything got saved today, but we're dangerous to kind of closing this this little island here yesterday, but we never really were able to close below it or fill that gap, and it's getting a bounce today. So again, we'll leave it at that. Again, a lot of these things, again, we're gonna say the same things. I want to see what NFP looks like. I want to see what earnings look like, obviously. Transports here up 60 basis points, but I don't like what it did yesterday, as you guys know. Yeah, we were claiming that the 50 MA, but I don't like that you close below that green. That's a failure. So I would be careful with the transports here. They got a lot of work to do to repair this chart. So just be careful with DJT here. I don't like what I'm seeing there on the daily. All right. So interest rates here, definitely much more of a traditional type risk off look. 2-year yield did hit kind of this local double bottom. It did not break through. Same thing with fives. We got down to the yellow line. So I don't think there's much more downside here for fives. Maybe you could get down to 368. There's a test candle pivot right there. Tens, this can still go a little bit lower. And the 30 can go a little bit lower as well, although this is still holding up and still has plenty of room here for a higher low. So bonds getting a really big bid early on. Why? Because of KRE. A lot of fear in the banking sector, kind of risk off look. But yields did come off the lows as KRE came off the lows. It's going to be a really interesting dynamic coming into play here. So, earlier this morning, it was actually kind of funny to watch, the market. We had the ISM data, and we popped up here. Yields got a really big bid. They came back down, but this market's got a lot of whipsaw here, and it's trying to figure out, okay, dollar down, obviously that's good for markets, but if it's down because bonds are up because banks are failing, it's a bad. And it's just funny to see the algos fight over the hot ISM print and kind of figure that out. But in any case, yields here, I don't think have a lot of downside, as you guys know. Anyway, XHB still acting really well. So there's our home builder chart. And again, still doing weekly consolidation. No problems with that. It's still just overbought on the larger time frames. VNQ, nice recovery. We talked about this yesterday. It had to hold this area. We tested it today, basically almost to the penny. I think we're about 10 cents away, and a good reversal. So VNQ popping right back up, and that pattern can still be fine. You just don't want to see it close below 83.24 tomorrow. That would be a weekly failure, and I would not like VNQ there. XLF, again, down earlier, like you'd imagine, but managing to scratch back 2-cent gain. Again, I don't love the XLF as a banking ETF because it's got Berkshire, it's got American Express in it, but, it's a financials ETF, and, right now it's holding up. We back tested 38.25, and we got a bid off of that. KBE, really good slice. This needs to follow through tomorrow. So I don't want to see it close below 42.79 tomorrow. And the same thing with KRE. I don't want to see this closing below 48.29. So that would be a failure on the weekly. And that could spell a lot of problems for the banking sector. But as we've known from last year, that could just end up being bullish for AI, right? So in any case, they all came off the lows. Broker dealers came off the lows as well, managing to finish up about 1/3%. All right, oil was all over the map. Again, we talked about this earlier. The ceasefire, the not ceasefire. The point is you're into the 50 MA. So I'd like to see bulls here defend this by tomorrow. Let's put our lines on. So right into this 50 MA. Again, there's still room for a higher low in oil. It's not necessarily dead, but definitely went up into that pivot there, and we backed off. Take a look at the intraday all over the map. This is when the news hit. Then they denied it, and it bounced, and then it came right back down, and now it's kind of just up off the lows here. So we'll see how this shakes out. Again, lots of knee-jerk, headline numbers getting digested here. We'll see what this does tomorrow, but you're right into that 20 and that 50. There's nothing to say this can't put in another higher low. But definitely oil all over the map here. And I'm just going to leave it alone here for right now. XLE down 15 cents, but nothing terrible here. So this is your positive for oil. You're still seeing dip spot kind of in the the leveraged sector essentially. So XLE is still holding up okay. XOP, that has room for a higher low too, and that did come off the lows. The OIH, I still like this a lot, but this may want double bottom. So just based on that pattern that I'm seeing, I do like the test candle from the other day, but I'm not liking that reversal. It does look like it wants to come down a little bit, but I still think this level is very good down here. The uranium here, take a look at CCJ, big outside move. That's a new multi-year high. So CCJ right back in an uptrend here. URNM, new all-time highs. So again, that's your drop and pop. First hit of the 20 from an extended place, and there it goes. So big move there in the uranium sector, and they are still acting well. Nat gas, that was all over the map again today, so down 2.5. Again, I don't love this chart because of the fake gap. This may need to go down and test 2 or a pierce of 2. I definitely can't rule that out at this point. You got a little double bottom. Again, I don't love the double bottom because it's on the futures with this obscene gap there, but we'll see what this does here. I don't think there's a ton more downside for this, but we'll see how it plays out into next week. That's the best I can give you right now. Dollar index, guess what? It's doing the same thing it's been doing for the last 2.5, 3 weeks. So inside of this tight range, if this fails and we close below, we get back below this yellow line here, then the dollar can go a lot lower. But until then, I'm still giving the upside bias because it's coiling up for a move here. Gold was also up today, although it did come off the highs. So again, this was up on fears as well, but good move here. This pattern is fine on the weekly. It's also fine on the monthly. So no problems here in the gold market. If the dollar gets some type of a bid, that may put pressure. If yields get a bid, that may put pressure. But right now, yields are coming down, and obviously precious metals like that. Silver had a good day too. Take a look at that candle. I like this type of candle. So big move down and then closing back green with a big tail. So nice test candle there for silver futures. And I think if that consolidates a little bit more, that can go higher here in the short run as well. Platinum, same kind of look, little test candle. Overall, just inside of this green. So if that firms up, that can push back up to 960 and then 990. And then palladium, similar kind of look. So down, then back up intraday inside of this micro green. Again, got to get through 1,000 and then it can push back up. Copper here, that was lower today, so pretty good outside. Look at the moves in copper here. Big move, these wide range candles, like it's going to start a new trend, and then it comes right back in. So we got to 395. We pulled back. I don't even have a good level for this. I mean, if it firms up here, it can consolidate for a move higher. If it comes down, short term, you'll have support around 379. That's really the best I can give you on copper right now. It's just been a mess lately. All right, Bitcoin here. So that held up. So we were down a little bit earlier, little micro kind of inside bar there on the daily, but your trend is still up here on the daily. You're above all the moving averages. And if this can consolidate beneath 44, it can push higher. So it's going to need to do a little bit of that. There's a lot of resistance here at this breakdown bar. But, right now it's fine. And again, the weekly is fine as well. So no real problems here. You just got an inside bar pattern. I think if this was holding up and this 20 MA catches up, I think it can break out. But we'll see what it does here over the next week or so. I just don't want to see it below 40K. All right, again, so we got about 30 minutes left before the end of the day. Again, doing the video early. We'll see what we get here. 49.05, 49.06 is a pretty good level for the market here. Look at NVIDIA. This is just computerized buying 101 here. But in any case, we'll see what earnings has to offer. I think Meta, it's a little overbought. It's in an all-time high. I mean, look at the monthly here. You know, at some point, you know, some of these got to get priced in. Although you could make a case on the other side that, you know, because Google already reported poor ad revenue, that some of that's baked into Meta. I don't know. I'm not going to speculate on that. I think if anything, Amazon is probably, I would say, the most likely to pump, since that's still so far from the all-time high, whereas everything else is may do all-time highs. Then you've got Apple that has kind of traded down into earnings. Again, we'll see what we get there. But again, remember, even if we're up, down, all around, we still have that NFP tomorrow at 8:30. So that will be obviously a big driver. It's going into the end of the week, and the weekly close will be very important as well. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.